Hi friends, Simit here from InformedTrades.com. Today's May 14th, 2014. Time for our daily Forex chart review. Basically in these sessions, each trading day, I share the trades I'm placing, adjustments to existing positions I put on the market, all to help traders learn from my successes, learn from my mistakes. We can all sort of go through the routine of trading and learn together. Of course, I'm just presenting my style of trading, focusing on price action, focusing on identifying swing turning points in the market, in the Forex market. We have a lot of information not only on the methods that I use in trading, but also many other styles of trading, many other markets over on InformedTrades.com. Check it out. Register as a member, share your knowledge, set up a trading account, set up a blog, journal, document your trades, and we can sort of get in the path or get in the process of disciplined trading and learning from our mistakes, constantly improving. Okay, let's take a look at the charts. Right here is the gold chart. Okay, gold chart here. Yeah, this is a chart I like to start with. You know, I have a long-term position in gold that I'm invested in considerably, at least relative for me. You know, I've identified this AB equals CD pattern here. Mainly, I just want to see 1280 hold. I don't know how valid this pattern is or how useful it is, but I do like to see 1280 hold. I do think gold, for fundamental reasons, is going to go much higher. Clearing the 50 simple moving average and the 200 exponential moving average is going to be a major milestone. We have them right here. So long as 1280 holds, I think it's a good time to accumulate. I certainly am doing so with my longer-term investing. That is gold. Let's take a look at the currency trades that I have on today. Okay, first up is Canada Swiss. Let's go to that. Canada Swiss. Okay, so far so good on this pair. You know, I had to wait for a month, but you know, I entered this way back in mid-April. Yesterday or 2 days ago, what is this? May 8th, actually, well, a couple days ago, we had a big breakout. Closed above this orange line, which is a minor resistance level. I moved my stop to break even, so this trade has been fully de-risked. Now it's just a matter of holding on. Here's my target profit, and I may actually, well, we'll see. It's always when things are going your way, you sometimes feel confident, want to hold on longer. Of course, you don't want to hold on too long. We're coming right around, as we get closer to 200 exponential moving average, I like to have a target right around there. This level is actually a good level because it's a resistance level. So further away, we could expect the market to possibly reverse there. That trade's been de-risked, though, which is what's nice about that trade. Also, I have on Pound Aussie. Let's go to that. Okay, this trade has also been de-risked. I'm short this. You know, we had a range forming at resistance with 50 simple moving average was there. We had a 50% Fibonacci retracement from swing low to swing high. Excuse me, other way around actually, in a downtrend, so not swing low. And we had a really nice reversal candlestick here, so I had a bunch of signs, nice confluence of indicators, and that was, you know, all I needed to go short. When short at this level, this trade has actually been de-risked, so I should move that down here. By de-risk, I mean I move my stop to break even because it closed below this this support level here, as illustrated by the dashed orange line. When price closes at or below that level, I will, you know, move my stop to break even. It's cleared a level of sorts, so this trade has been de-risked. Now it's just a matter of holding on. Let's see if it goes to 77.28, which is where the target profit is, and that is, of course, a support level established back in mid-April as well. So that is Pound Aussie. So far, so good on those trades. There's also Pound Yen. This trade we've talked about a whole bunch every day. It's a de-risked. I took half off even. With the Yen trades, I am holding out for a much larger gain. So it's just we're going to be holding on for patient. So far so good. It's in the money. Stopped at break even, so if it does reverse, I won't lose any money. So those are the trades that have been de-risked: Canada Swiss, Pound Aussie, and Pound Yen. All my stops are at break even on that. Now for the trades that are still, my stop is not at break even. So if the market reverses against me and hits my stop, it's money. First on that list is Euro Yen. Now, this is actually, Euro Yen is the only position I have on at the moment that is operating at a floating loss. So it's nice that the other positions are doing well. So here I entered at the black line. My stop is at this red line here. My break-even point is this dashed orange line. We saw before position on for a while. Now let's actually zoom in a little bit. Okay, now one thing here is, well, okay, we haven't really set new lows. I really don't want to see price go below set new lows. If it sets new lows, this should be it. Sets new lows, that's not a good sign. Um, I was in this trade back since early April, so it's been a while. Almost got a chance to move to break even. It was at this resistance level, but didn't clear it. We peaked above it a couple times. We didn't close at or below. So bears are definitely guarding this level. Hopefully, though, the bears have, all the bears came out and we're only able to push price back down here. And hopefully next time we go up, it can break past. At least that's what I'd be hoping. One possible interpretation of price action based on what we're seeing so far. That is euro yen. Another yen trade I have on is dollar yen. I'm very bearish on the yen. Bad economic data continues to come out of Japan. I think that out of the major economies in the world, Japan I think is struggling the most. I think the yen has backed itself into a corner and is really nothing it can do besides devalue itself. InformedTrades.com/Japan for the whole fundamental story on that. We have a lot of information on that over on InformedTrades. Dollar yen here. Yeah, I've been in this. I actually got in this trade back here in April. Another trade where it came here, it closed at this orange line, and moved my stop to break even. Then it got stopped out. Price came back down. So we're similar to euro yen, in which we came up to his resistance level. We weren't able to close really above it. This one, dollar yen, did manage to close at it. So I decided to move to stop to break even. It came back down. I took out my stop. I still thought the trade was valid, so I re-entered right away. Now let's see if we can, first we have to close above the 50 simple moving average, and then there's still that orange line here, which is the resistance level that needs to close above before I can move my stop to break even. Once I'm in a trade, I really want, the focus becomes that orange line, that minor resistance level. Once price closes above that, then I can move my stop to break even, and I can deploy that risk somewhere else. If you move it too early, it might just come back down and hit your stop, and you need to find, moving their break even is a little bit of an art, finding the right level at which you can do so where it's not too close, but at the same time no point doing it if it's really far away also. So that's dollar yen, that's in the money. Now it's just a matter of waiting. Let's see if we can get at or above that orange line. First, of course, we'll have to clear above the 50 simple moving average. So we looked at euro yen, we looked at dollar yen. Next up is Kiwi dollar, and this was a trade that an order I discussed yesterday. It did get filled, and so far so good on this one. You see, got filled this black line, and it was actually earlier within the hour or an hour ago. It was higher, so the hourly candle just sent it a bit down. You can see a little bit of a long wick forming here. It's still in the money. Let's see how this fares. Pulled back to support. It was 61.8 Fibonacci retracement. 50 simple moving average is a little bit lower. My stop is below that, so we still have a fair amount of distance between here and the stop. That's sort of the Kiwi dollar trade. And the orange line here is at 86.86. So if we can close at or above that level, that trade will be de-risked. Still have a bit of a ways to go. Now, a trade that I just put on order, it just got filled, is for dollar Canada. This will be my fourth trade that has not been de-risked. My stop is not at break even on this one. It just got filled. So I'm at maximum risk exposure. I don't like to have more than 1% of my account at risk at any time. So if all my stops get hit, I don't want to lose more than 1%. Now with this order, I am at that position. I shorted dollar Canada at this dashed gray line. My stop is at this red line. The target profit is here. And I should actually, let me add the point at which I'll move to break even. And I'll do that right. I think here is probably a good level. And I may adjust this a little bit. I'll think about it a little more. Let's make it dashed. Okay, we can look at the 4-hour chart, get an idea. Sometimes that's useful in finding a minor resistance level. I wanted to clear something. This is actually interesting, and that does give us, I can move it a little higher. If we can clear that, that's pretty good. Let's look at it from the perspective of a daily. Okay. Clear this level, swing low here, going back here. That could be an interesting point. If the market close at or below this level, I'll move my stop currently here down to break even here. Other than that, the target profit is at 107.03. I'm risking 62 pips here, right? A shorty at 109.04, stop at 109.66. My target profit is at 07.03, which is 201 pips away. If we target 201 pips and risk 62, that gives 201 divided by 62 is about 3.24. So that's the reward risk. In general, I look for a reward risk of at least 3. Of course, higher the better. Often higher the better. I really like to capture. My basic strategy is, I'm looking for bigger wins, and I may compromise on win percentage. In general, in fact, I'm losing on more trades than I'm winning, but because the wins are disproportionately larger than the losses, it can work in my advantage. That's sort of the approach I have in trading. Not saying that's the best approach or the only approach, but it's maybe, or what I would say is that it's the best approach for me. So you have to find something that works with your psychology, your lifestyle. That's all really important. That's about it. I have this trade documented on my blog on InformedTrades.com. Check that out. Any questions you have, anything you want to add, join us at Informed Trades. Best of luck in your trading, and we'll see you tomorrow. Take care.